My mortgage went from, don't judge me here, $3,200 a month to $5,600 a month. Backstory here is I was looking for a house back in 2022, and I put in offers on multiple homes. So we decided to go, I'm sorry, they got declined, and they wanted 50 to 60 grand over asking price for the home with no contingencies and all that kind of stuff. Long story short, I bought a new home with Ryan Homes. The worst decision I've ever made in my life, I swear to God, and I am paying for it till right now.
Buyer's regret is plaguing the housing market, especially for those people who did not have the patience, comprehension, or the desire to carefully select a home of their dreams. Instead, they bought into the propaganda that in order to be a happy American, we must first be a homeowner. Now, normally, you guys, owning a home is an absolutely incredible thing to do. But, and there's a huge but here, not during the worst housing market bubble in history from both a price and payment standpoint. Now, many of these buyers, many of them fell victim to bidding wars, appraisal gaps, waiving contingencies, and high pressure realtor sales associate tactics. So today we're going to go over some of the reasons why so many people hate the decision that they made to rush buy a home, as well as going into some detailed, comprehensive review of some of the most recent updated housing market data. And one trend that I'm super excited to report on that I've been following is the surge of new listings. A surge in new listings could be an indicator of distressed selling and a flood of inventory. But the first thing I want to say is happy Sunday. Welcome back to Real Estate Mindset. This video is going to be absolutely bonkers. Now, before I go into some of these articles, let's listen to the video once again and listen to this man who recently, back in 2020, purchased a new home. And he did so, you guys, without a realtor or even understanding how property tax works. Listen to what he has to say, because here's the thing. I'm sick and tired of listening to realtors or investors or anyone that wants to put us down and say things like, hey, you missed out on the opportunity of your lifetime. No, you didn't. And we know that because we can hear the testimony from the people that actually put their money where their mouth is and purchased. They hate the decision that they made, and there's a reason why. Listen to this.
Long story short, I'm actually selling that home right now. Bought a mortgage with Ryan Homes. And I am the last house that's built on this subdivision, the absolute last house. When I signed on the dotted line, my mortgage was 32 and some change. And I was fine with that because that's what I expected, the size of the home, X, Y, Z, yada, yada, yada. Come to find out that, again, I had a realtor during this time, but with new construction, Ryan Homes doesn't pay the realtor a commission. So I was like, well, okay, I'm not going to ask him to come in and do any kind of work because he's not going to get compensated for it. So I let him know what I was doing, and then ended up being no realtor. So anyway, next thing I know, I get the first tax bill on the property with land. On the property with the home build. The taxes were $16,000. $16,000. So that's not not the half of it. So I then go call, like, hey, is this right? Is this correct? Like, yeah, that's your correct property taxes. We're not sure why, but Ryan Holmes did your estimate based off what your taxes could be on the home because you're the last home built. So there's plenty of comps in the area that they can use as, hey, your taxes could be this. However, they use taxes off the land because it's going to show you a cheaper mortgage.
So what happened to this man is he purchased a new home. And when you purchase a new home, the builder often pays property taxes on just the dirt. Generally, the property taxes don't update until the home is sold. And then the county finds out that, okay, now there's a dwelling here and we tax that appropriately. Now, in Texas, as far as I know, you by law, as a residential loan officer that I am, have to indicate to someone like, hey, you're not collecting enough property taxes in your escrow. Of all of the clients that I helped when I was still helping people with lending and things like that, every single one of them, I made sure to collect not too less. I collected too much property taxes. So if you're going to buy a new build and you're going to use a lender that is controlled by the existing company, understand that a lot of times they're going to get you into that house with a fake payment that's not real. And another thing, when it comes to new home builds, remember, a lot of those people purchase those new homes based on incentives that the builders were offering, like those buy down interest rates that start out at a 0%, then go to 2 or 3 or 4%. Understand that if you got a new home build within the last 4 years, you are trapped. You cannot sell. And generally, you cannot refinance. Why? Because you already have a low interest rate. What are you going to refinance into 4%, into 6%? Your payment goes up $700? I don't think so. The reason why you can't sell, well, number one, you probably have no equity. But also remember, if you bought a new home, you're now and you want to sell, you're competing against the developer and builder. And guess what, you guys? They're offering 2% interest rates, $50,000 off, and a washer and dryer package. When a seller from a new home build is selling, generally they're in distress and they don't have the ability to lower the price or to offer those crazy incentives. And another thing, he didn't even have a realtor because that system is designed from Ryan Homes. According to him, they didn't offer a realtor commission. So they tied this guy's hands behind his backs because that's exactly what those new home builders want. They want stupid consumers that don't ask questions and that they can confuse through the process, because if a consumer is confused, they're easier to manipulate. The first article I'm going to go over came out just 2 days ago. Americans regret buying a home in these big cities. So when I go down here, let me just read the first snippet and then we'll look at the cities here. In the past few years, Americans have been in a home buying frenzy, which is not accurate. For the last couple of years, absolutely almost nobody has been purchasing homes. We have had some of the lowest sales on record. When the dust settled, it was found an astonishing 72% of first-time home buyers had regrets about their purchases. You guys are going to see some other stuff that says it's even worse. Many of the factors can contribute to the general dissatisfaction, from distance from family, home prices, that's a good one, cost of living, and others. However, in this article, we found Americans whose main regret was the location they chose. The first one here is Seattle, Washington. So some of the highest regrets in Seattle, Washington, probably because an 800 square foot townhouse costs something like $900,000, and this place is riddled with crime and homelessness. Second city is right here, which is New York City, New York. For obvious reasons, obviously the cost of living there is absolutely insane. Austin, Texas, probably because home prices are down from peak over 20% right now. Los Angeles, California is number 4. And number 5 right here is Phoenix, Arizona. Buyer's remorse plagues post-pandemic home buyers. It gives us some reasons why so many people decided that they regret buying a house. Number 1 here that they're saying is surprising costs of home ownership. I'm going to just read this paragraph here. Homeowners pay more than $24,000 a year in addition to their mortgages. Surprised? What's changed since 2020? I don't even need to read this. I could tell you guys right now. Property taxes, homeowners insurance, HOAs, and overall the cost of living has absolutely exploded. Meanwhile, our wages have stayed the same. And in fact, when we adjust for inflation, in some situation, wages throughout this whole process, this cost of living crisis, have actually gone down. Most Gen Z sellers have regrets over pandemic home purchases. Now listen to this. This is insane. 5 years after the arrival of COVID in the US, 94% of Gen Zers, 94% and 86% of millennial first-time home sellers say they regret their pandemic-era purchase, according to an analyst by Open Door. During the COVID pandemic, eager home buyers flooded the market, driven by remote work flexibility and historically low mortgage rates. For many first-time home buyers, it seemed like a perfect time to invest, but now many of them are regretting it. According to Open Door's first-time home seller report, 94% of Gen Z, 86% of millennials, and 48% of baby boomer first-time sellers are taking accountability for their pandemic purchasing mistake. So they sold and then they rebought, and they basically wasted all of the money that they made off of the house. Competition was fierce and inventory was tight during the pandemic, leaving buyers with little choice but to act fast. That's not accurate. They didn't have little choice but to act fast. They could have just stopped completely and decided, you know what, I'm just going to sit this one out for a few years, see what happens, and I'm going to be happy renting, which is exactly what I did. Now, many failed to consider long-term lifestyle choices, while others failed to consider the impact purchasing would have on their finances. Ultimately, for many buyers, rushed decisions are now catching up with them. 79% of first-time sellers surveyed admitted to making mistakes, and 91% said those mistakes influenced their decisions to sell. Ouch. Many Gen Zers now realize they purchased too soon, or interesting that they're now saying too soon. Get it? So we should have waited. Why should we have waited? Because prices are going to come down. Why? Because they have to. Why? Because it's the everything bubble and no one made enough money to sustain this. Millennials, on the other hand, were more impacted by financial factors such as underestimating maintenance costs and overlooking inflation and interest rates. You can't do that, guys. Across all generations, financial uncertainty and the fleeting nature of remote work added to the challenges. While renting offers more flexibility, she acknowledges the financial trade-offs. For short term, renting would have been more financially feasible. Yes, that's correct. In the short term, it would have. Do we want to own homes? Yeah, we definitely want to own homes. Owning a home could be a great thing. But there's a huge but. You got to use the math, and the math has to math out. And I'm specifically talking about price here. Payments is another thing, but I'm specifically 100% here now. We're talking about prices. If you're looking for a long-term, home ownership is definitely the way to go. Really, what if you lose your job, have a foreclosure or bankruptcy? Is it the right way to go then? No, it's not. Just like what happened to me. I had a bankruptcy foreclosure because I purchased a home that I couldn't afford in 2009. It took me 9 years and bankruptcy to rebound. I had to crawl myself out of the gutter. I don't wish that upon anyone. And the reason that I had to do that is because I was foolish when I made my decisions. I was making my decisions like a child just right out of high school, because I was kind of, and not like an adult. You can't do that when it comes to the biggest financial transaction of your life. Millennials regret buying their homes. Why it matters. Millennial homeownership dream, delayed and frustrated by 2 financial crises in less than 20 years, is now being thawed by the affordability crunch plaguing the U.S. housing market. Despite a recent dip in sales due to the fact that so many home buyers have been squeezed out of the market over the past few years, home prices are still rising across the country. The median sales price of a home in the U.S. was now $427,388 in December, according to Redfin. Here's what they want you to know. For the majority of millennials, it is probably a surprise that the same dream they spent years striving for might turn into a bit of a nightmare once it comes true. A majority of 81%, so these surveys are different, but they're all bad. A majority of 81% of millennials told Clever Real Estate that they are planning to buy a home in 2025 and that they are confident they won't regret it. But about 82% of millennial homeowners who have already purchased already have some regret. 82%. So 81% of millennials think they're not going to have regret, but the people that have already purchased, 82% of them say they do have regret. And let me ask you this. Do you guys think that 81% that thinks that they're not going to have regret is paying attention to anything that you and I are saying or anything that those people regret purchasing a home are saying? I don't think so. At the end of this video, I'm going to talk to you guys about the specific solution. I made you guys 2 courses that are going to turn you guys into experts when it comes to purchasing a home using math and what to look for. Let's start jumping into some data. We're going to start with active unit counts for existing. We already know that for new homes, that is blowing up right now with inventory. Prices are declining depending on the subdivision. But one thing I wanted to point out is where we're at right now for the entire country. So active listings, right? So they're not pending, they're not new homes, it's active existing. Right now in February, and it should go up from here, we have 847,825. Now, when we look at right before we went into lockdowns, we were sitting at 928,363, which means we need about 80,000. Think of what I'm saying. Not 4 million. We need 80,000 active listings to get to where we were pre-pandemic. But that's not true because we have more new homes right now than we did pre-pandemic. So this is what I'm saying. Right now, we have more homes up for sale when we include new homes than we did pre-pandemic. That's right now, you guys, right now. When we break this down into the 4 biggest housing markets in America, which is arguably California, Florida, Texas, and New York, let's see what the inventory is there. So the number 1 housing market in America, California. So California in February, you guys can see this, is sitting at 52,144 active listings. When we look at pre-pandemic, which is February 2022, we had less inventory. You guys, we had 51,455 active units, which means, thank God, finally in California as a whole, they now have more existing active inventory than they did pre-pandemic. Isn't that great? Looking at the number 2 housing market, which is arguably Florida. I mean, Florida's off the charts. I mean, going back to 2016, they've never had this much inventory. Florida has way more active inventory right now than they did pre-pandemic. Right now in February, they're sitting at 168,717 homes for sale. That's a lot of homes for sale, you guys. Pre-pandemic, February 2020, you see right here, they only had 129,210. So they have blown that off the doors by about 40,000 active listings. There's a lot of turmoil happening in Florida right now. And that's not even talking about the property taxes, homeowners insurance, and the condo HOA crisis that's going on as a result of the Surfside condo collapse. Looking at Texas, just like Florida, is off the chart. So Texas right now has 105,867 active listings. Again, this is February. It's just going to go up from here. Now, when we look at the February right before the recession, all we had in Texas was 82,285. So again, we've knocked that out of the park by about 20,000 active listings. And I will say, of which roughly 15,000 is from Airbnb. Looking at New York, which is one of the 4 top housing markets as well, now you can see, and you have to be careful here, not all housing markets are the same. Look at New York. New York right now has only 28,877 listings. When we look at going into the pandemic, February 2020, they had 49,905. So they have about half of what they had right before the pandemic. Also interesting, you guys, Florida housing market crash warning issued for 3 cities. Now, granted, this is CoreLogic, who's completely useless in my opinion, saying these things, but the 3 cities that they're warning you, I'm not warning you, they're warning you, I'm warning you about everything. I'm saying do the math, look at subdivision, go hyper local. They're saying Winter Haven, Tampa, and West Palm Beach. That's very interesting. Why that matters. After years of booming, the Florida housing market is now experiencing a slowdown as the influx of out-of-state newcomers has shrunk considerably since the pandemic, and affordability issues still stand between aspiring buyers and their dreams of home ownership. What to know? Researchers at CoreLogic identified Winter Haven, Florida, Phoenix, Arizona, Tampa, Florida, Tuscan, Arizona, and West Palm Beach, Florida, as U.S. markets most at risk of facing price declines this year in 2025. Florida housing market echoes Great Recession, real estate analyst says. So what to know? Florida ended January with the highest inventory of any month on record dating back to 2012. Think about what this is saying before you discredit that there's not going to be a housing market crash. Just look at the data. Why has it taken so long? Probably everyone expected it, and probably a big one as well, inflation and stimulus. According to Redfin, with 172,209 homes for sale, the following month, according to the real estate brokerage firm, there were even more homes on the market for a total of 227,727, up 17.8% from a year earlier. Florida is going to continue to skyrocket with inventory. You guys are seeing it, and you're going to continue to see that play out. When we look at the most recent Redfin housing market report, all I'm going to do is go down to the winners and losers of this week. They're saying, again, I'm saying go hyper local, study the math, go into subdivision. But what they're saying is the biggest increases for metros for year over year prices. Number 1 is Cleveland, Ohio at 11.3%. Nashua is always up here at 10.1%. Number 3 is Northpark, New Jersey at 9.4%. Milwaukee at 8.9%. And Anaheim is back in the picture at up 7.8% year over year. Now, the biggest declining metros, and obviously there were 9 metros now. Okay, this is shooting up. I want you guys to understand that things are changing, and they're changing like crazy. But the top 5 declining metro areas, according to their own data, is number 1, Jacksonville. That's down 3.7% year over year. Tampa's also down 2.5% year over year. Austin, 1.9%. Baltimore, 0.9%. Atlanta, 0.8%. So if you waited to purchase, guess what? Now you have falling prices, and you have what? Triple or double the amount of inventory. So falling prices, triple to double the amount of options. Plus, you probably won't have to deal with as much buyer's remorse because there's not some crazy bidding war. Some of the data I want to show you guys that's really, really important here is the first one is home buying housing payments. So we hit a new record right now. So we're at the highest housing payments on record, sitting at $2,807. So yeah, we have 3 times the options, but the payments are still astronomical. Why? Is it just because of interest rates? No, we've had 6% interest rates before. It's because the prices blew up and it's in a massive bubble right now. That is up 5.3% year over year. But another thing I want to show you, this is a really, really important data set to take a look at, guys. This is new listings. New listings, look at, that's the green line. Look at that trajectory. It is freaking exploding. Now, it's going to be really important that that trend continues for at least 3 more weeks. So if that trend continues for at least 3 more weeks, it's bucking normal seasonality where it starts to decline a little bit and then goes up. So if this sucker continues to skyrocket, the housing crash is coming to 2025. Keep your eyes on that, you guys. This is going to reflect distress sales, foreclosures, speculation, fire sales, things like that. But again, I'm impressed right now by that massive trajectory. Now, it is up 7.5% year over year. I wanted to go back to Austin real quick because a lot of people don't appreciate Austin, being that it's down over 20%. Austin peaked around May of 2022 when they had a median sales price. You guys can see it on the bottom of the screen at $659,500. That has gone down over $140,000, more like $145,000, all the way to $510,500. So I believe it's appropriate to constitute a crash in Austin, being that it's down over 20% from peak. But let me know what you guys think. Can't we constitute a price crash happening in Austin right now? I mean, how would you like it if you lost $140,000 and you're now stuck in home ownership, or rather trapped? Would you like that? Now, for the solution part of this video, what do you do if you want to get a home of your dreams? You got to be patient. You got to be a solid asset at your company. You can't get fired. And if you do get fired, you got to protect your purchasing power and get a new job. Now, as you're waiting on the sidelines, credit, income, and assets are the 3 things that you really need to focus on. Have a credit score, mid-credit score of over 740. Have about 1 year of savings in your bank. And as far as income, make sure you're not buying a home where the mortgage exceeds 30% of your net income. People are like, oh, well, Travis, you go over 55 of your gross income. Well, why do you guys think that there's so much buyer's regret? And why do you think that FHA mortgages has a skyrocketing delinquency rate right now? You don't have to listen to what I say, but if you do, you're going to get ahead of most people. And another solution is this. Conquer the apathy right now and take the free freaking courses that I made for you guys. I don't want you to get bullied by realtors or anyone that's in the housing market. 2 classes I want you guys to take if you're interested in purchasing a home of your dreams. The first class is the Home Buying Masterclass. It's going to teach you about credit, income, assets, mortgages, and things like that. But when you want to know the math, you got to take this one, especially if you're a realtor. And I made this for realtors as well, because I want realtors to do a good job. This is how to do a market analysis. So here you have the comprehension. The second course right here, you have the knowledge on how to use the math to find the deal. And my friends, that is the solution. So if you're out there looking for a home, you may want to pump the brakes, be confident in renting, save your money, and maintain your purchasing power, just like I am. And I'm going to tell you guys right now, I am so happy I've been waiting. I'm so happy I've been patient, because in my own housing market, I can find homes right now that are priced at 2020 levels and 2021 levels. The only reason I haven't pulled the trigger yet, the cash flow is absolutely, it's terrible, because I live in the Panhandle in Texas. So my property taxes skyrocketed, homeowners insurance skyrocketed. So even if I find a home at 2020 levels, I still can't buy it because the freaking payment is astronomical. But either way, you guys, happy Sunday. Tomorrow morning, we're going to do a live. Mitch and I are going to do a live. So be here tomorrow morning. And other than that, if you guys are out there investing in real estate, you guys already know I wish you luck, and I do hope you win.